Good afternoon. My name is Ron Sienna from Miria Systems. Thank you for joining us today for our webinar entitled Paperless Transform Your Business with IBM and Miria. I'm really delighted to introduce Marty Michaels as your presenter today.
Thank you, Ron. Appreciate it. We're going to get started here. So I want to thank everyone for joining us. Just looking at the list on the screen, looks like we have a very large group this afternoon. So appreciate your time today. The title of this presentation, as we said, is the theme for the day is Work Paperless, Transform Your Business Processes with IBM and Miria. Our main focus today is going to be around talking about different document management processes that allow an organization to streamline their business processes, and maybe for many of you, even more importantly, to address regulatory compliance issues. The real question is, what if you could remove paper at the process at the source? How do we digitize and move to this paperless world of fantasy that we've been talking about for 50 years today? We're going to walk you through different elements of that in today's discussion. The overall webinar will take about 35 to 40 minutes, and you have questions, please prepare them and send them over by email. We are going to keep the audio portion of this isolated to just the presenters today, rather than a two-way conversation, because with large groups it can get a little bit hectic. As Ron said, my name is Marty Michael. I'm the President and CEO of Miria. And you can send any questions you might have to the email address on the screen right now during the course of this presentation, and we'll capture those and we'll come back and try to address those at the end of the discussion. If any audio problems, please send an email to Ron Sienna, that's R-Sienna at MiriaSystems.com, that's R-S-I-E-N-A at MiriaSystems.com. Thank you, and let's get started. So the agenda here is that we're going to go through what I call a quick primer. It's basically two slides. We're just going to touch on compliance issues. So if you came in today to get education about regulatory compliance, I apologize. We're not going to go very deep here, but we are going to touch about some of the things that our customers and our field consultants are dealing with on a daily basis. I'm going to talk a little bit about what is document management, or many of you may call it content management. We'll touch a moment on a commercial for who is Miria, and we'll talk about what the approach is and how you might put some of these business learnings into action at the end of the presentation. So with that, let's get moving here. So the first thing that I just mentioned that I want to address is the compliance issue. What do you do in an organization where you have constant pressures around regulatory? And a lot of the customers today that are on the phone, or a lot of the participants on the phone today, are in the banking and the finance industry, and I see a couple pharmaceutical companies on there. There's also some distribution and retail involved today. And so I'm not going to touch on every specific industry requirement. We will talk about the big things around the public company issues of SOX. Summary Section 802 is something that our consultants constantly run into out there working with clients. This is what puts fear in many customers in terms of how they manage their internal processes and stay within the guidelines of the SOX compliance. This is important because it imposes legal penalties and fines, including imprisonment. Nothing like having that threat hanging over your head if you're the CFO or the CEO at one of these companies. It also imposes penalties, imprisonment for any one in the finance or the accounting department knowingly or willfully violates the requirements of maintenance of audit or papers for a period of 5 years. Now, again, we're not consultants on compliance, so I would encourage you to talk to your own experts on this to get more details. But this sets a stage on what we're going to talk about today in terms of compliance. The next slide talks a little bit about what are some of the risks and why is what we're going to talk about today important in the context of managing compliance. The first top thread is put together by Deloitte Touche, is a lack of an enterprise-wide, executive-driven internal control management program. Obviously, executive sponsorship is very important, and no one has higher vested self-interest in addressing this than the C-level executives in your organization. And getting them behind any program you want to implement is very important. Second risk or top threat is a lack of a formal enterprise risk management program itself. And going along with that is the lack of a formal document control and management program. The third, inadequate controls associated with the recording of non-routine, complex, unusual transactions. Some of you may be old enough to remember the Enron tragedies and other companies that have fallen by the wayside because of unusual accounting practices and in cases very unusual, and in some cases just poor record keeping in general. So making sure that you have processes in place to adhere to those intricacies of your business is important. The threat by Deloitte Touche is the lack of effective controls over the IT environment. Fifth is an ineffective financial reporting and disclosure preparation process. Lack of formal controls over the financial closing process. And we'll touch on that a little bit today in terms of how accounts payable and other financial document management, the closing process can be streamlined. And the last one is really the lack of current, consistent, and accurate policies and procedures to manage all this. So we are a premier IBM partner, and a lot of what we're going to talk about today has a foundation around IBM software and IBM software for document management specifically. And we're going to get into some use cases here in a moment that will start addressing some of these top threats. So let's go to that point and let's address what is document management. Talking about document management or content management, or in the case of accounts payable, invoice management, or in the case of contracts, contract management. The organization today has a wide range of documents out there. They have off-site storage in many cases, whether it's Iron Mountain or one of those organizations that puts cardboard boxes outside of your office, wants something and pulls them out and brings them back when you need them for the auditors. Scanning and multifunctional devices are everywhere today. There's a need to classify documents that you capture and scan and bring into the system. And retention and records management is very important. You know, how long do I keep these documents? How long do I maintain them? And, you know, there's also the element of personal information, which I have a couple more slides on in a moment. And what do you do as far as segregating security around those documents so that you make sure that items with social security numbers can't be viewed by different people. And in today's world of the so-called use for paperless, what you'll obviously see in most companies is the number of documents and pieces of paper that they have to manage has continued to rise steadily over the last, several years. When you talk about employee management and what I just referred to as PII or personal information management, you have to be concerned about managing the actual content itself, because it often has information on that. When you look at an employee life cycle from left to right, on the left upper quadrant where it says recruit, going to right, onboarding, training, retiring, and obviously in the middle of that you had to hire, you had performance reviews you had to complete, and you had payroll. And most large organizations we work with today are managing employee benefits, so they have health care information that crosses into that issue of managing personal information. Even the supervisor and manager is oftentimes not authorized to see paperwork and information that goes to an employee's health, or more specifically employee mental health, such as alcohol-related issues or just personal health issues in general. Those documents need to be segregated and separated and managed, and a paper-based system is often not the best way to do that. Then there's, remember item 7 on the Deloitte risk items, where it said the lack of a proper policy and procedure. Well, you might have policies and procedures, but if they're not well known, they're well trained, and you can't prove that you trained on those, it has the effect, in some cases, of being worse than not having a policy at all. So one of the things you get from a strong document management policy and policy is the ability to manage these policies and procedures themselves, from the initiation and drafting it, the reviews and the revising that's going to happen continually as laws change, as corporate needs change, the approval process, who signed off on it, and then training all of your individuals. These are also business use cases that go directly to document management, go directly to managing risk and compliance, and they're all items that can be addressed quite easily with a strong document management process or investment, if you will, into some of the practices that we're going to talk about here today. So we're, I said earlier, an IBM partner, and the main products that we work with customers, in addition to our own products, is deliver our solutions in partnership with IBM on the IBM Content Foundation document management system. And what involved with that IBM infrastructure is it has a rules-based workflow engine that allows you to manage the routing and the approvals and all of the processes we just discussed in the other use cases. It allows you to validate those items. It allows you to bring in the images. We often are working with your various machines and multifunctional devices out there that are spread out all over a corporation to collect those documents. Sometimes we're OCRing them or reading the data off of an image that comes in. Sometimes we're categorizing them so that they're searchable and retrievable later. But these tools help to manage the overall document process itself, and that you can provide a strong foundation for your organization. Now, the use cases that we're going to talk about in a few moments around financial document management all apply and utilize this core foundation of the IBM Content Foundation system. Now, the reason why we're using this system is it is number one. It is the #1 content management system, is ranked by Gartner Group. On this screen here, you'll see that there are many options out there today in the marketplace. Many of you are probably users of the Microsoft platform called SharePoint, and we often deliver systems that work in parallel with SharePoint. It has its use in the market, but as well does making an investment into a strong business tool like the IBM Content Foundation adds a whole other layer of security and compliance around into your organization. There are other options as well, as you'll see, that deliver very pointed solutions there, but the IBM platform really has a complete product offering right now that will help you to achieve the goals that we're talking about here today. So let's take for a minute, let's talk about a real use case. Now, Miria is a deliverer of accounts payable solutions. It's our core product, and we use that as a use case today, but it doesn't, by no means is it the only thing that we can actually be doing with the technologies we're talking about. So this process that you see on the screen right now is a fairly typical manual processing flowchart of an organization that is doing managing accounts payable through a manual process. First item there on the upper left is that you'll receive a vendor invoice. It may come in by mail, may come in by fax, maybe come in by email. Then all those invoices are put together in different groups by somebody in the mailroom. Maybe they're batched by location so that they go out and route for approvals, or maybe they're stated by purchase order versus non-purchase order. These invoices are often routed to internal processors. Maybe someone does East Coast, someone else does West Coast. You might have one processor per 3 branch location offices if you're a retail bank. There's a lot of scenarios out there in the marketplace today and how your company have to manually process these incoming invoices. Often they're prepared for processing. In the upper right corner, you'll see that processor in the AP department will often review those invoices for accuracy. They'd be matching them or checking them against purchase orders, and they might be just checking them to make sure that it's a valid vendor in your accounting system. Then they'll typically route those to approvers. Now, in a manual-based process, this might mean scanning them and emailing them. It might mean putting them in a manila envelope and sending them through interdepartmental mail. In some extreme cases, it might mean sending in at a FedEx package once a week out to some field location so that the reviewer out there, or the approver, can review those. Now, that approver will go through the invoice. They'll often approve them. They'll often stamp them and put right codes on them in some cases, and then they'll return them back to the processor. That process might be reversed in some organizations, where invoices actually go to the field locations to the approver first, and it comes back to the processor, but the overall workflow is relatively the same. It's just a matter of who gets it first. Now, at the end of this process, invoices are typically posted into your accounting system. This means, obviously, that someone in the accounts payable department sits down, opens up that invoice, locates the vendor, types in the particular values that they need to create that voucher in your accounting system. And from there, it goes into a processing for payment. Payments will then be sent to the vendor down here in the lower left corner. The document itself for the invoice needs to be ready to apply to or to store and save for the auditors. There might be a sales tax capture that's required as well in this process for invoices. That might mean you store it and then you bring it out at the end of the month or the quarter when your tax audit department wants to look at it, or it might mean that you're actually capturing the sales tax rules and that you need during the process. Those processes vary greatly by customer. A lot of times our consultants will sit down with the customers and help them map this out, help to understand how their processes are laid out today to look for areas where we can streamline it. How does this all apply to the whole theme of content and document management? Well, the first thing to consider is that this process typically starts with a document. It starts with a paper or a scanned invoice that comes in by email. And by managing this paper-based process through here, again, whether it's electronic in the form of PDF or it's paper, there's a lot of touch points that happen inside of processing those invoices. Typical invoicing costs for a company manually processing invoices like this are between $20 and $35 per invoice, and you can see why pretty easily with the number of touches that occur around the invoice. And, you know, by the way, at the end of that process, you have to store it and file it, and there's costs between putting that in the internal file cabinets for a year and then moving them to the archive at some point in the future so that they're stored off-site. Now, let's look at this in terms of an alternative. So the first thing to think about in this is what if, and remember the theme of this presentation is about how do we transform and digitize the process? How do we capture information at the very beginning? And what we've got here is a typical invoice. This is an example that we have on the screen where you have the vendor in this box and you have the invoice date and the number. You might have line item information down here, and you certainly have invoice total that you need to pay along with tax amounts. And what you have the ability to do with the technologies today is to capture that invoice at the very beginning. So you can actually install software that watches your email inbox for the accounts payable department and identifies items that are invoices and pulls those invoice images out of that email and then goes through a process of OCRing those invoices to extract all of the data away from it. In the big world, you don't want to ever touch that piece of paper, and you don't really even want to open that email. The same process applies if they're being scanned on a multifunctional device or central processing room. You really want to take advantage of the extraction technologies that are available through OCR to pull that data off of that invoice. Now, when you do that, let's look at the same process. Now, remember over here we had a process that involved roughly 14 steps. Let's talk about how you can streamline that process by utilizing technology as opposed to manually processing it. Here, and you'll see that the invoice is sent in from a vendor. Now, that invoice comes in, again, predominantly email is the #1 delivery, but there's also a lot of paper coming in to customers. And what can happen today is that invoice comes in, and when it comes in, the technology runs it through a process in the technology of the IBM Content Platform. And remember, I said rules-based platform. So the rules now look at that invoice, and they determine, is this a purchase order invoice or a non-purchase order invoice? Is an invoice for the Cleveland branch, the Cincinnati branch? Is this an invoice for a valid vendor? All of these different rules can be applied to that email that comes into that AP email inbox. And before anything ever happens or a person ever has to look at that or touch it, the rules can start determining what is going to need to happen with this document. In some cases, you're still going to need to send it to a processor to review it, so the technology is not always going to be 100%. But the rule here is to manage by exception. Process 90% of your invoices through automated processing and through these works, and you're going to see a lot of the work that's going to fall out of this process. So, for example, we come in and the invoice comes in, the rules processing can determine, does the invoice need to be approved? If it needs to be approved, who needs to approve it? Those rules that are inherently figured in the technology will make that determination, and there's no need for a human to ever touch that particular invoice image as long as we can determine that's a particular type of invoice, it's for a particular amount, and send it to an approver. And we can be as complex as you want. If the approval limit for this type of invoice is $5,000, and this approver that it would typically go to in a retail or branch location is not able to approve it at $5,000, they can automatically approve it to this next person. Or you might want to send it to the first approver and let them review it, and then it still automatically goes to the next person in the approval hierarchy to certify that that invoice is accurate. The middle area there, a purchase order or PO match invoices is really kind of cool when you think about it. When an invoice comes in that is for goods that have been ordered by a purchase order system to your supply chain management system, most customers look at this as a situation where they've already approved the purchase order. So when the invoice comes in, if the invoice matches the purchase order, there's no need for further approval. So often what will happen is when an invoice comes in and the technology identifies a purchase order on the invoice, it will do a transaction lookup and find that purchase order. It will validate the invoice amounts and the vendor information against the purchase order that's already stored in the system. And if that invoice matches at 100%, there's really no need to do anything else with that. It can go directly into your end accounting system and be paid. And this in itself greatly streamlines that process. Now, it can get a little bit, an additional process that might be required in terms of receipt matching. If you want to check the purchase order against receipt of goods, that can also be done electronically. And in a lot of cases, it may need to be done manually. But in either case, you're electronically matching the purchase order against the invoice. And remember that the invoice has been, the data has been read off of that by that OCR technology. So the workflow engine now is taking that next level of invoices out of the manual work process and handling them automatically. Last arrow is always the exceptions. There's always exceptions in the process. Some of them will require manual interaction where an AP processor will need to go in and validate and make sure that everything is accurate. Others can be actually put into the workflow rules. So it's really a matter of what kind of exceptions you have, how often they occur. Many of our customers have situations where they need to immediately pay some vendors. So that requires a special workflow process. Sometimes you might have invoices, for example, in the restaurant industry, invoices for liquor have to be handled in a particular manner for different reasons. They may have to have different approvals. Capital projects, capital expenditures or fixed assets, those types of items that get coded to GL codes with those items may need a secondary routing that allows someone to record or manually process that or approve it under a different approval chain. The number of scenarios in terms of setting up these rules is really quite endless. At Miria, we have consultants who put a lot of time, energy into making sure that we help guide the customers identifying what are the best practices in the industry, how do you best streamline your process down. But the goal here, when you compare this slide here, where typically will take, 5 weeks is a long time, but typically an average of 3 weeks to process invoices manually through this process, and as opposed to here where you can really do it in as little as 1 to 5 days. And if you follow the example I gave, when a purchase order invoice came through where the purchase order has been approved, literally that invoice can be processed and through and ready for payment within minutes after it hits your inbound email box for the account payable at whatevercompany.com. Now, is that important to have it ready whenever typically you're only paying your vendors every 30 or 45 days? Yeah, and I'm going to tell you why in a few minutes, why there's some opportunity that you can take advantage of if you can get that invoice processed quickly. But more importantly, there's really no reason for it to be invisible to the CEO and the controller. When you know that there's a purchase order there, you can get the invoice into your system quickly and be able to manage it and know exactly what your responsibility for payables are. It greatly improves the overall visibility to your organization. So, now, 2 reasons to consider accounts payable automation when you're approaching this. And often customers that we work with every day who end up going after accounts payable as an early process, and their end game is really overall compliance management. They know they need to improve document management, but they go after accounts payable early because in many cases that project for accounts payable can fund the whole organization's technology requirements around this managed documents and content in your organization a lot more effectively. Reasons why you should consider it: it's really impossible to manage invoices across multiple locations, and we use an example here of 100 plus. We have organizations today with over 1,000 locations, which often means they have anywhere from 2,000 and 3,000 different approvers, usually 1 or 2 per location at the minimum, plus department heads and that. Typically in most organizations, there's 6 to 10 touches per invoice. You saw that on the graphic slide that we showed earlier. Managing emails and printing and all of that's very difficult back and forth. Say I've got this invoice and send it out by approval. The AP processor waiting for that approval to come back. And more importantly, that email, now is either got to be stored so that it's visible to auditors that you followed your policies and procedures. In terms of audit prep, it makes it really difficult if you don't have an automated process to do some of this. Long processing times per invoice is the number 4 reason to consider it. Lost documents equals finger pointing between organizations. It's not unusual to be in the field and have a vendor say, hey, listen, I'm holding up delivery because I haven't got your payment for X, or I'm not coming to clean you today, offices today because you haven't paid me. And a lot of times, obviously, that's just one day here or 2 days here. But if you think about when invoices get delivered to a field location, they'll sit on a used desk for a week before they'll go around to processing them, and then they send it back to corporate for manning and putting it in the system, and that might be another 5 to 10 days. Somebody's on vacation, and depending on when that hits, the 2 weeks becomes 3 weeks. And depending on the discipline of the person who received that and the workload, it's pretty easy to see how that 3 weeks can become 5 weeks in some cases. There's a possibility of late payment costs, obviously, to manage. And then number 7 here is something called lost opportunity accounts, lost opportunity for discounting and taking advantage of early payments. In today's world, many of the corporations are sitting on significant cash for payment, and that cash for payment can be applied best by taking advantage of discounts that are available from vendors. Sometimes that's printed right on the invoice, 30 days net, 2% net 10 or something like that. And if it's taking you 11 days to process it, you're missing that opportunity. Another option in that, which is called dynamic discounting, which is a whole other webinar that we would encourage you to take advantage of. But dynamic discounting applies to be able to create a communication between your vendor community and your AP department to take advantage of discounts on the fly. In some cases, the typical 2% net 10 can be 15%, net 5, but that's usually not offered in writing. It usually requires a communication between the field or vendors and the corporate accounting department through what we call a vendor portal. And we're glad to get into more of that later, but a longer discussion about some of the opportunities around vendor portals. Numbers 8, entry, GL code information, vendor, et cetera, goes away when you're managing the process automated in an automated deal with SOX, compliance, audit trails, and internal controls obviously gets streamlined because a true automation system gives you instant access to the documents, and it creates an audit trail between who made what invoice or who approved what invoice, who submitted it, actually certified that it's able to be paid. All that can be in an audit trail. And last item, and real important to the accountants on the phone, is it greatly improves your overall audit process and your month-end close if you can get much greater visibility. In a typical AP automation system, it's pretty common to be able to walk in and say, give me an accrual amount for all of the invoices I have in process right now, and then obviously at the end of that month you're going to reverse that as you process through and do the process all over again. But having the ability to extract that out as opposed to making an estimate be real important depending on the size of your overall AP spend. So there's a lot of folks in the AP automation market that will back up what we're saying, and don't take our word for it. Reach out to some of them. PayStream Advisors is a #1 consultant in this space, and a couple others that do studies around the procure-to-pay or the accounts payable market. #1 reasons why most companies look at this is bottom line. It's your bottom line. You address reduction in labor and processing costs. You get rid of few missing and lost or missing invoices, and you much quicker approval cycles. And I won't go into all the other items there, but these are all important elements to why it's important to really consider AP process automation. Organizations today that are constantly trying to evolve. This is an IBM slide here that talks about the marketing concept of SMART. SMART is about limiting paper, improving your overall document governance, and trying to standardize your approach to managing documents across your organization. Now, IBM Content Platform is the #1 in the market. We said this earlier, but a few facts here. 24 of the top 30 top banks worldwide are managing their documents in the IBM Content Foundation technology stack. 15 to 16 of the global telcos. I'm not sure what's going on with the other one, but I'm sure somebody's working on that. Obviously, insurance industry. We have a lot of customers in both banking and insurance today that are using this, and and so on and so forth. So, this brings to the end the rapid in here that I'm going through in terms of AP automation and content management. I'm the President and CEO of Miria, as we said in the beginning, and my goal here is to help customers to improve their overall processes, to be able to streamline document and content management across their organization. Now, it's been around for a while. We are a full-service provider in this space. We have a lot of expertise in process automation, digital transformation, and cloud document management is something new we've been doing the last few years. We consider ourselves extremely knowledgeable. We have a consultative delivery methodology to define customer-specific requirements, help you design and identify best practices that are applicable to your organization. We get a lot of pride today in an effective and accelerated time to value. How do we deploy this sophisticated level of technology and business process automation in just a few weeks so that you can start taking advantage of it? In many cases, these type of AP automation processes can be done, within, 12 to 16 weeks. And, we want to emphasize, obviously there's a knowledge of the IBM brand out there, and IBM brings along with a lot of security and very strong technologies to be able to manage large companies. But understand that at Miria, we work with both large and small companies. We've actually been successful deploying AP automation on as little organizations with as little as 100 employees and others as large as, 100,000 employees. So we offer both on-premise and hosted solutions to really serve the needs of both types of organizations. Now, I mentioned earlier the importance of our expertise and knowledge around the consulting area in terms of helping you define your best practices that are applicable to your organization. If you engage with Miria in terms of trying to achieve AP automation, we have a team we're going to send out. They're going to go through what they call an accounts payable workshop. In just a matter of 3 or 4 days, we're typically going to be able to map out your process, both the current state and the future state in terms of streamlining and your approval process, streamlining your purchase order matching process, and streamlining your overall management process or non-PO invoice management. The goal is typically to be able to identify what your company needs. We're not always going to force technology down every element and try to automate every part, because remember that I said before that there are always going to be exceptions that require some manual handling. But when we look at applying the technology, we really want to go for the happy path, we call it, or the work path that applies 90% of the time for streamlining invoices. Miria's products in this space, we actually have pre-built and configurable applications that sit on the IBM Foundation space to automate this process. We have a product called ActivePay, just for accounts payable management. If you'd love to see a demo to that, we can arrange that at any time. We can actually demonstrate it just a short notice. We have something for travel and expense management, which is modular to ActivePay, and Active Ledger as well is a application for the managing of those complex accrual documents that support some of your transactions that you often have to do in the close process. And the foundation for all of this as well is Active Mailroom. Active Mailroom is a application built on IBM's data foundation, which is a high-speed, high-volume batch processing system to automate the extraction of data from invoices to OCR and pull off the actual values that we need off of those images. This is the same technology that's watching your fax machine to see faxes coming in. It's integrating to be able to bring invoices off of your multifunctional devices or that email address, as I've said quite often in today's discussion. With some additional products, there is Active Search. Active Search is high-speed search capability for all documents, which makes them visible and easily reportable to auditors and other people out in the field. A typical use case is you might have receiving documents that you're sending, and you need the field to be able to bring those up, and that's often a very lean approach with Active Search. Active Content makes best practice use of IBM's Content Navigator Foundation, and it's an application delivered and supported by Miria on the IBM Content Navigator Foundation. For reporting, a lot of times pulling reports and information out of the process is important with business intelligence, and we have active integrations to Microsoft's Power BI as well as to IBM One Analytics. And then the last module we talked about, which is vendor portal, this really is a segue to a future webinar, or you can reach to us for information in the meantime around vendor dynamic discounting that I mentioned before. But these are all add-on modules, and all the products are delivered and supported by Miria. We also have full mobile capabilities. We have requisition management that's available. The management of tax forms is often completed in Miria ActivePay, as well as form management in general. All of this can be delivered to any of the applications that we talked about before. And the mobile capabilities is something really great in terms of managing travel and expense, but even invoice approvals can be done on an iPhone or an Android device. We did mention earlier that we deliver this as a managed service as well as on-premise. The managed service is quite popular today. It's actually the fastest way to deploy and gets us up and running. One of the main attractions to the managed service is that it requires very little involvement from your IT department. If they're swamped and having a hard time getting to, then this is a great pathway to evaluate automating some of these processes through the cloud-based solution. This is customer proven. We've been in the marketplace for quite a while. The companies that are using and driving their organization through the use of our accounts payable management and the other applications. Here's a snapshot on the screen of those companies, and most of them are on the platform, and they've been using our technology for a while, and they continue to upgrade and to take advantage of the new functionality that we're always making available. So, we've talked a little bit about this. This is a snapshot of some of the screens that you could see in the system. We can see that the invoice image on the right, this is a typical display you would see in the system, and the capturing of the document is on the left, and it's a little small. I know you can't see a lot on the screen, but I wanted to add that in there. Again, we mentioned before, if you want a demonstration, we can set that up. We do emphasize that we have best practice templates for rapid deployment. A lot of companies that we work with are you might be in banking or financial services, or you might be in retail. Retail auto parts is something that, there's a lot of SKUs and a lot of items, and there's often a lot of payable invoices to manage in a lot of locations. That's quite conducive to the use of these pre-built templates. And the pre-built templates really don't replace that consulting arrangement we talked about, where we come in and identify your best practices, but they allow us to be able to demonstrate quickly what others are doing and to formulate an approach that's going to work for you. I'm going to summarize this a little bit because we're a little bit out of time right now. We usually like to end these about 45 minutes, and I do a couple questions came over that we want to address. And right now we got 5 minutes left before we're scheduled to end this webinar. I want to take a moment here to address any questions. And let me just bring that up to that email address and allow you to send in emails that you have at the last moment over here. And I'm going to read off a couple questions here in a second and address those questions. Okay, so the first question comes in from a customer, or I should say hopefully a potential customer in Los Angeles. And their question is, how do we handle sales tax management in our system? Good question, and there's a lot of ways to, but the quickest one is to say it depends. We have quite a bit of extensive capability for managing and capturing sales and use tax information in systems. So a lot of that depends on how your current accounting system manages and works at. Some customers do an estimate, and they want to be able to capture a reasonable snapshot to do that estimate. Some customers want to be able to identify every line item or every invoice to a particular tax jurisdiction, and we can support that. So, for example, if you get invoice tax in for Sacramento County, and they charge 6%, but the vendor did not charge you for that, and you want to add into our system, our system can automatically identify that that's from Sacramento County and apply the right jurisdiction code to it. The tax percentages comes usually from whatever you have in your accounting system or you're stored there, but we can calculate that for you and provide that information back into either reporting, or you can pull it out and manage accruals to it. That's one way. I mean, it was technically actually a whole hour just to talk about the different options that are available for managing taxes in the process. We have the most common way is that the AP department doesn't get involved and they process those invoices through, and then they use our system to come out and pull those invoices and simply pull in and audit them after the fact. We have several options to discuss, so if you'll follow up with our team after that, we'll go into more details of that. Okay, I have time for one more question. It looks like the question is about implementation. How much involvement do you need from your IT department? This system at the end will integrate with your accounting system. Now, typically, I mean, I brought up a slide here on the screen I skipped. This is some examples of some accounting systems that we typically send data to and we receive data from. So the integration that we have today between J.D. Edwards and Epicor and Lawson, where we're going to implement a services between that system to be able to bring in reference data. For example, we typically want your vendor master of your vendors so that they're readily available for selection on that invoice. The GL code will come out of your accounting system. The tax tables I mentioned before. Obviously, purchase order data, if we're going to match purchase orders, will come in out of those systems. So those things that we call reference data, which go to matching on invoices and validating that an invoice is accurate and payable, all of that will come out of your typical accounting system through an integration. So we're going to need your IT department all there in the ability to securely allow us to access and bring that information out. And they're not, if they don't do it that way, they can also extract it themselves and put it into a file location where we pick it up and bring it into our system. But it's a typical data exchange between those systems. Now, the most important interface between our system and your accounting system is the outbound interface. Now, this process wouldn't be very effective if we capture the data, we extract it, and at the end of it, you still have to go and manually enter in all those vouchers in your J.D. Edwards system. Typically, what we want to do is we want to send you an outbound interface that creates those transactions for you. Remember and keep in mind now that whenever you're getting that into that accounting system, that invoice has already been approved, it's been matched, the geocoding is typically done right in our system so that it's an automatic import. And most customers, once that comes out of the interface for our system into your accounting system, the process is done. It simply goes into the system. We're going to be entered into the right accounting tables between your different inventory systems and the other general ledger functions that happen inside of the accounting systems. Typically, what we need your IT department for on there is the same thing. What is the data mapping to send this transaction into your system to streamline this process? And a lot of organizations today are in the middle of moving between J.D. Edwards to PeopleSoft, or PeopleSoft to J.D. Edwards, or Microsoft Dynamics to Epicor, or whatever. And one of the beauties of having this system, which manages pay to procure or payable out of the accounting system, is number one, what we do, the accounting systems can't do. They don't have the typical sophisticated OCR workflows and management and exception management that we have in our system. But more importantly, what we can do is we can actually interface with multiple systems at the same time. So many companies are growing by merger and acquisition, so they may have Epicor in one place or Lawson in another. And by no means, if you don't see your accounting system up here, don't think that's everything that we do. We have an open integration platform, and we can work with others besides the ones that are on the screen. But we're merging or acquiring a company, you're going to have a time period where you're going to have multiple accounting systems. And the system actually allows a shared services approach where we can manage the AP process as a single workflow across an organization, even though the different business units or that all have different accounting systems on the back end. So it looks like that's all the questions we have time for. We have a couple more, but we'll follow up with those directly. I apologize if we didn't get to them today, but I want to thank you for your time, and I really appreciate your involvement with taking or participating in our online webinar. Thank you.